Your phone buzzes with a breaking news alert. Fed decision expected this week on interest rates. You don't fully know what that means, but your stomach still drops a little anyway. You keep scrolling, half worried, half confused. Nothing about your day actually changed in that moment, and yet you feel like it did. Here's the strange part. You couldn't explain the federal funds rate if someone asked you right now, and yet the headline still stressed you out. That's not a knowledge problem. It's actually a very specific, well-documented psychological reaction. And today I want to show you exactly why vague financial news does this to almost everyone. The Fed just met again this week, July 28th and 29th, announcing its decision today. The Federal Open Market Committee, or FOMC, is the group that actually makes this call. 12 voting members meet, discuss the economy, and decide whether to raise, cut, or hold rates. Their decision technically sets a target range for something called the federal funds rate. That single number quietly influences mortgages, credit, cards, savings accounts, and loans across the country. This happens 8 times a year, and almost every single time, the same reaction repeats. So let's actually understand what's happening in your brain when that headline hits. There's a well-known concept in psychology called ambiguity aversion. Economist Daniel Ellsberg first demonstrated it back in 1961 in a now famous experiment. People were asked to bet on drawing colored balls from 2 different urns. One urn had a known number of each color. The other urn had an unknown mix, even though the odds were mathematically similar. On paper, a rational person should feel roughly the same about both choices. People overwhelmingly chose the known urn, even when the odds weren't actually better. Humans don't just dislike bad outcomes. We treat the unknown itself as a kind of danger, separate from the actual outcome. We specifically dislike not knowing, even more than we dislike knowing something bad. There's newer research that takes this even further. A study published in Nature Communications, led by researcher Archie de Burker, tested this directly. Participants received mild electric shocks, sometimes predictable, sometimes completely random. Random, uncertain shocks caused measurably more stress than the predictable ones. Participants' stress responses were actually easier to measure and more pronounced under uncertainty. Not knowing what was coming was, physiologically, worse than knowing something uncomfortable was coming, even when the predictable shocks were, on average, just as unpleasant. This has been replicated in various forms since, across different kinds of uncertain situations. Uncertainty itself carries a real physiological cost, separate from the actual outcome. Now apply that to a headline like, Fed decision expected this week. It doesn't tell you what will happen. It doesn't tell you how it affects you personally. It just signals something important is coming, and you don't know what. That's the exact shape of ambiguity aversion, delivered straight to your phone. Money adds an extra layer on top of pure uncertainty too. It's tied to security and stability, things that feel foundational rather than abstract. So a vague headline about interest rates can hit harder than an equally vague headline about something else. Financial headlines are often written this way on purpose because uncertainty keeps people reading. Markets brace for Fed decision is a headline built entirely around unresolved tension. Words like expected, closely watched, and braces for all signal tension without resolving it. That unresolved tension is exactly what keeps a headline getting clicked. Your brain treats that tension as a threat, even without a single number attached to it. Now let me tell you about how I used to experience this myself every 6 weeks or so. Every time a Fed meeting came up in the news, I'd feel this vague sense of dread. I didn't have a mortgage, wasn't shopping for a loan, nothing time-sensitive going on. Still, the headlines made it feel like I should be worried about something. I'd open my banking app, stare at the same numbers as always, and close it again. So I started asking myself one specific question every single time it came up. It felt almost too simple to actually work at first. Does this actually change anything about my situation right now, today? That one question did more for my anxiety than any amount of economic reading ever did. Here's the small framework I use now to translate this kind of news into something real. First, identify your actual exposure. Do you have variable rate debt, an adjustable mortgage, or a credit card balance? If yes, rate changes can genuinely affect your monthly payment. If no, most single decisions won't touch your day-to-day finances at all. This one step alone eliminates most of the anxiety before it even has a chance to build. Second, check what actually happened, not just the headline tone. Hold, means no change, even if the coverage sounds dramatic. A hold is often the least newsworthy outcome, even though headlines rarely reflect that calm reality. Third, ask what would need to be true for this to require action from you. Usually, that's a specific event like refinancing, buying a home, or opening a new savings account. If none of those are happening in your life this month, the news is informational, not urgent. Fourth, separate the news cycle from your actual calendar. The Fed meets on a schedule. Your finances don't have to move on that same schedule. Since I started doing this, Fed Week stopped feeling like something I needed to brace for. I actually feel calmer now, even though I understand more, not less, about how it works. Here's a mistake I used to make constantly. I'd read reaction articles the same day as the announcement, full of speculation and hot takes. I also stopped watching the live press conference in real time, reading a short recap the next morning instead. Same-day coverage is usually the most uncertain, most reactive version of the story available. Waiting even a day or two often gives you a much clearer, calmer picture. By then, the initial noise has usually settled into something closer to an actual explanation. Now let's clear up a myth that drives a lot of this unnecessary stress. A lot of people assume every Fed meeting demands some kind of personal reaction. Check your savings account, reconsider your mortgage, do something, anything, right now. On the surface, that feels responsible. The Fed is talking about the whole economy, so surely it applies to you too, right? It feels almost irresponsible not to pay close attention every single time. But here's the twist that gets lost in the headlines. Most Fed decisions, especially holds, simply confirm that nothing new is happening yet. As of this meeting, the Fed has held its rate steady for 5 consecutive meetings in a row. The target range has sat at 3.5 to 3.75% through multiple meetings in a row now. Economists polled by FactSet largely expected another hold heading into this exact decision. Fed Chair Kevin Warsh has also signaled less forward guidance than previous chairs typically offered, which means even the experts are often waiting for clarity, not reacting to something dramatic. For most people without active loans or big financial moves planned, that means very little change. Financial advisors commonly suggest something simple here. Hold your existing plan unless something fundamental in your own life has actually changed. Not something in the news, something in your actual life. That's a very different bar than, the Fed met again this week. Let me paint a picture of 2 different people experiencing the exact same news cycle. Person 1 has a fixed-rate mortgage locked in years ago, and no other variable debt. Their rate was set the day they signed, and it stays that way no matter what the Fed announces. Every Fed meeting, they read the headline, feel a flash of anxiety, and check their accounts anyway. Nothing about their actual monthly payment can change from this news, not even slightly. Person 2 is actively shopping for a mortgage this exact month, comparing offers. For them, the Fed's decision genuinely matters, and tracking it makes real practical sense. They might even adjust the timing of their application based on what gets announced. Same headline, same day, completely different actual stakes. The myth isn't that the Fed is unimportant. The myth is that every single meeting is personally urgent for every single person reading about it. For most people, most of the time, the honest answer is simply, not yet, and that's fine. So here's what I'd actually suggest. Next time one of these headlines shows up, pause before reacting and ask what your real exposure actually is right now. If you have variable debt or an upcoming financial decision, it's worth paying real attention. If you don't, you're allowed to read the headline and just keep scrolling. That's not avoidance, that's an accurate read of your own situation. Save your actual attention for the moments your finances are genuinely in motion. You don't need a finance degree to stop feeling ambushed by a notification. You just need one honest question about whether it actually touches your life today. If this made Fed headlines feel a little less like a threat, that's exactly what this channel is for. Every week I break down the psychology behind money news that quietly stresses people out for no clear reason. Subscribe if you want more of this. And tell me in the comments, did this week's Fed news actually change anything for you personally? I'm genuinely curious how many of us it actually touches. My guess is fewer people than the headlines would have you believe. Either way, no judgment, just genuinely curious about the gap between the headline and the reality. See you in the next one.